Welcome back to the Registrar's Report. My name is John Buckley. I'm the Registrar of Deeds for Plymouth County. And in our last segment, I talked, along with other issues relative to our numbers for the month of October, just how great refinancing have been across Plymouth County. And that we're up historically over last year, which is a good thing. So I have a guest here today that'll talk about some of those issues. I have John Trotman, Vice President of Heritage Mortgage Company out of Hingham. John, welcome.
Thank you.
Thanks for being on the show.
Appreciate it.
And we had some conversations prior to the show and just talking about the fact that the mortgage market's doing pretty well these days, isn't it?
Yeah, it absolutely is. It goes without saying the interest rates are at an all-time low. The underwriting guidelines have been tougher over the last few years. The ding that the market has taken. But being a mortgage broker and being familiar with the loan process and the underwriting guidelines, that's pretty much our forte is to be able to help consumers get through that process and be able to get those interest rates that are out there. So
first, why don't you tell our viewers a little bit about how you got into this business?
Yeah, sure. Well, Heritage Mortgage started in 1993. We incorporated in July of 1998. So we've been in business for about 19 years. For me personally, I've been there since January of 2004.
Right. Yeah, we saw at the registry probably back in 2002 and 2003 a huge burst of refinancing. People that would refinance a couple times over and over again, and sometimes got themselves in trouble because they overborrowed, and then when the market came down a little bit, they were underwater and had some problems. But we've really seen over the last couple of years with low interest rates, artificially produced low interest rates, but the people are able to take advantage of refinancing and save themselves a lot of money.
Yeah, what we've seen really over the past year anyway, the negative equity has actually, the percentage has decreased. So there are some homeowners that have seen some equity come back to their property. For most people, that's still not the case, but in 2011, the government expanded a program that was already in place, HARP, to revamp it to HARP 2.0. HARP was a good product. It didn't hit all the marks. HARP 2 still has its flaws, but it is a great opportunity for people that are currently underwater, meaning owing more than the house is worth, to benefit from these interest rates. We've had the pleasure of helping lots of people save hundreds and hundreds of dollars per month. The average is about between $400 and $500. I think our high mark was like $721.
That's great.
You look at the cash flow that is now put back into that family's budget. It's phenomenal. Yeah, it's phenomenal.
And how do people usually come across your company?
Well, we are a mortgage broker firm. We are not a lender.
Right.
Okay, so we do not underwrite or fund or sell the loans that we're associated with. Basically, our function is to act as an independent contractor and arrange the mortgage loan between the consumer and the lender, which has a lot of advantages using our services versus a direct lender, some of which are we have working relationships with a variety of lenders both locally and nationally. So we are able to, on a daily basis, view what they're offering for rates. So you come into our shop and we go over your credit file. We try and figure out what your goal is for the transaction, whether it's a purchase or if it's to take money out for college education or it's just a simple rate and term refi. Whatever your goal is, we're going to work with you to find you the best options as far as interest rates, closing costs, turn times. Give you 3 or 4 options to get to where you need to be.
Yeah. So I hear a lot of people through the grapevine, I guess, as much as anything, that it's become more difficult to get mortgages, although our numbers are higher and people are qualifying. What have you seen as changes over the last couple of years that have made it more difficult to qualify for people?
Well, the whole mortgage market mess had created a real tightening of underwriting guidelines. Initially, they were, so tight that it was almost impossible for someone to actually, refi without hassle. What used to be, a 15, 20-day process is now turned into, 45 to 60 days. Okay, that has to do with a lot of, extra disclosures and extra guidelines that have been tightened. A lot of the problems that we see that we're able to get ahead of before your file gets to a lender are things like your bank statements. If there's deposits that are not payroll related, underwriter is going to ask for evidence to where that came from, a letter of explanation, that type of thing. Your credit report, if it shows several credit inquiries over the past 90 days, an underwriter is going to come back and say, hey, these credit inquiries, I see you're looking for a lot of credit, please give me an explanation as to what it's for and if you incurred any additional debt. Those types of things that usually clog a file, we're able to get ahead of. When we take your file and we go through your situation, we're going to tell you ahead of time, this is what we need, in order to help you with a smoother transaction. Obviously the customer appreciates that, but the lender's underwriter also appreciates that as well, because they get a clean file. There's not a lot of questions, not a lot of loopholes that need to be tied up. So we're doing a service for the consumer in a lot of ways.
So where do you and your fellow employees usually meet with customers?
They usually either start out on the phone with a phone call. They come in and see us. We give them an idea of what they need for documentation. One of the biggest priorities, I think, to originate a quality file is to let the customer know exactly what they need up front, give them an idea of what the process is like, and the hassle is reduced when they're informed.
Now, how have you seen the last few months going? Is it still going along at a good clip?
Yeah, absolutely. From what I've been reading, the interest rates are going to remain low, hopefully, through 2013 and maybe even into 2014. So that's a great piece of hope to hang on to. But I would say that if you haven't taken advantage of the rates, don't wait for them to get any lower. Take advantage of them while they're here. And also, for people that are in a position looking to buy their first home, looking to maybe get a vacation home or an investment property, now is the time. Because of the low interest rates, the cost to borrow money is very cheap. And because of the market values in everybody's neighborhoods, the cost of property is very cheap. So that's the perfect combination for someone to get out there and take advantage of what used to be considered a bad situation. Take advantage of it. Get the vacation home, get the investment property, do an upgrade. Right. Now's the time.
Yeah, our sales at the registry are up year to date, and I think that people are realizing that the market is turning around, and it is getting a little bit stronger, and if you wait, you may not get the opportunity you'd get today.
Absolutely.
Yeah. So we are in the business of promoting home ownership. I think that's an important part of what the registry does. I know the realtors do that. I know you're in that business too. Let's talk about some of the people that have been out of the market because they might have gone through a foreclosure or a short sale, or deed in lieu of foreclosure, and they're looking to come back into the marketplace. Yeah. Have you had many of those people come to you to try to get back in ownership?
Yeah, we researched that thoroughly. With the Fannie Mae and Freddie Mac guidelines, and a lot of it. Each scenario is different, of course, depending on the individual's credit and work history and so forth. But when you have a foreclosure or a short sale, the foreclosure, I believe, is 7 years before you can get back in. A short sale is 3, and you should be able to show that you've maintained otherwise good credit from that point in time. So to educate people is our main goal, because that's the best way to work with somebody to get that done for them.
Yeah. So a lot of it's all about individuals having good record systems, so they can bring in the information you need to proper evaluate them. So if somebody's just out there watching this show and they're thinking about purchasing a home, whether they're a first-time home buyer or somebody that's been sitting on the edge, what would you advise them to try to keep track of and have available for them before they even call a company like yours?
Right. Well, you want to hang on to your bank statements. A lot of people shred them or just do online banking. You want to be able to show a steady work history. You don't want to have an overextension of credit. A lot of times people, what you see, or what I've seen, and now I always advise people in the beginning when I meet with them, someone who's trying to buy a home, they take advantage of these, no payments until 3 years down the road with some of the furniture places because they need to furnish their home.
Right.
The problem is it still appears on your credit and they're still going to debt you for it.
Mm-hmm.
And in most cases that will ruin someone's opportunity to purchase a home.
Mm-hmm.
So you want to stay away from those until after you have the keys in the hand.
Right.
You want to keep your bank accounts as clean as possible. Like as I mentioned before, any non-payroll deposits you want to keep record of, so you know when you're asked for the source and explanation of what it is, you have it available, and you're not trying to search through your files and trying to remember what it was. Keep all that stuff handy.
Right. So we're obviously in a better shape this year than we were last year, and probably better last year than we were the year before. Where do you see us going in 2013?
Well, I think, obviously the people that are still on the fence with the refis, you're going to still see some of that. We still see some people that are in adjustable
Mm-hmm.
products that are trying to get out of those.
Mm-hmm.
And the purchase market is continually improving.
Right.
And so there's a lot of first-time home buyers and upgrades to people trying to, sell the house they're in and get into a bigger home. So,
Mm-hmm.
the purchase market, I think, is where you're going to see a lot of increase, come spring.
Mm-hmm.
But there's also a lot of refis still left. So,
Yeah. Now, has your business changed with the number of banks that have gone out over the years that are in trouble? Some of the national lenders that close shop or anything like that. What's your basis of your business been? Who do you primarily relate with?
well, I think some of the banks that have closed have made it easier because there's less competition for the big banks. Okay, now the big banks take on X amount of the piece of the pie.
Mm-hmm.
The problem is because they're so overloaded, their underwriting is beyond 60, 90 days. I mean, it takes a long time.
Right.
So for us, it's been a benefit because we use wholesale lenders, not the retail side of banking. So we're able to get the loans closed quicker.
Mm-hmm.
And because we are familiar with the guidelines and the loopholes and the roadblocks, we're able to, like I said to you before, get ahead of that in the file for a smoother transaction. And people also appreciate picking up the phone and talking to somebody, and that's what you're going to get when you deal with Heritage Mortgage, where there's somebody always there. It's not like trying to call, one of the big banks and you get stuck in voicemails and never get a call back. Our customers have our cell phones, our emails, our direct lines. So in a way, the clog from the big banks has helped us.
Mm-hmm. So where do you see the overall industry going? Is it going to change over the next 5 years? Is it going to kind of continue to grow back to a better shape than it was before?
Well, some of the guidelines, the underwriting guidelines, have already started to ease a bit.
Yeah.
I don't think you're going to see the exotic loan products like you saw before that created the housing problem. I don't think you're ever going to see the irresponsible products that are out there. I mean, you're still going to have tough guidelines, which I think is a good thing. A lot of the over disclosure and the red tape hopefully will ease a bit as well. There's always going to be a need for homes, for mortgages and for real estate. So I mean, that's not going away.
Mm-hmm.
So whatever the cycle becomes, it is what it is, and we'll always have a need.
So your office is located in Hingham. Whereabouts in Hingham is it?
Yeah, we're at 175 Derby Street.
Oh, great. Right across from the great Derby stores, right?
Yeah, right down the street, actually.
Right, yeah, great.
Yeah.
And how would people reach you or your company?
The main number is 781-740-5500. My direct line is extension 232, and as I mentioned, we're always there. You can also go to www.mgroup3.com.
Great. Well, thank you for being on the show. I think we're going to see a good year in 2013, and a lot of people are going to benefit by that.
I think so too. And I just wanted to say, for people that are watching, if you haven't, to try to take advantage of these interest rates. If you've been sitting on the fence, if you feel that you're in a situation where you're unable to refi, there's no cost, no obligation. Just pick up the phone, call us at Heritage Mortgage. We'll take a few minutes, go over your situation, let one of us analyze your scenario and see if we can help you out. I'm sure we can.
Great. Well, thanks, John.
Thank you. Thanks for having me.
Great.